This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on September the 1st, 2016. Our time is 8:45 Mountain. It's Thursday. Don't forget, you can connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. 1-800-432-1022. 1-800-432-1022. Our featured diamond of the week is a 1.02 carat oval cut, fancy intense, yellow internally flawless. See it online, rarecoloreddiamonds.com, featured diamond of the week. It's a long weekend. We say happy Labor Day long weekend. Good luck to our Edmonton Eskimos on Monday in the Labor Day Classic against the Stampeders. Don't forget, if you ever miss a radio show, they're archived on Harold's two websites, HESradio.com or rarecoloreddiamonds.com. Podcast through iTunes. Type in The World Financial Report on Radio. Also, we're on TuneIn, and we have our own YouTube page as well. You can listen to us at your leisure anytime you want. We have not only the radio show, but a companion to the radio show. It's our free weekly newsletter. We send it out via email every week. And this week, we have some strong information. If you are not on our list for the free weekly newsletter, you can go through it in 5 minutes, 10 minutes if you want, or spend hours. Connect with Harold, get your name on the list, 1-800-432-1022 or rarecoloreddiamonds.com. One of the items from the newsletter really dovetails to what Harold has been saying for quite some time. Jared Dillian says the Canadian dollar is facing major headwinds. Dillian, the former Lehman Brothers trader and noted financial writer, notes, it's likely that the U.S. Fed will raise interest rates while the Bank of Canada will cut rates or leave them where they are. This dynamic will put pressure on the already weak Canadian dollar. High and rapidly growing consumer debt in Canada is also a concern. And if economic news continues to be poor, like the employment numbers that came out the first week of August, then obviously that's a concern. You look at the real estate market in Canada as well. Dillian thinks the Canadian dollar could move to 160 to 170 to the U.S. dollar, currently trading at about 130. He believes that shorting the Canadian dollar is one of the best macro opportunities over the next couple of years. And Harold, you've been pounding the table on this for quite some time. Now, we should note, we're Canadians. I'm a Canadian. I live in Edmonton, and we love Canada. This is nothing personal against Canada. This is just something financially that we believe is going to happen, and a person has an opportunity to make money off of it. And that's something that you've been saying quite some time. Get money into the U.S. dollar. And Harold, it looks like a lot of people are starting to buy into your theory.
Well, again, and you're 100% right, Randy. You're Canadian, I'm Canadian. This Canadian show has been on for 17 years now. So the fact is that we're just reporting to you what's happening and making recommendations as to what you could do to protect yourself. So again, in no way, shape, or form are we negative on Canada. We love Canada. So it's just a matter of what the situation is at this particular point and what, position the government has put everybody into that is such a mess at this particular point that we really need to sort it out and figure out what is the best way to go in order not to fall into the traps of 2008 and 2009. There's no doubt that there is a housing situation. There's a bubble happening in Canada, especially in Vancouver and in Toronto. And the fact is, in the article that Randy just referenced to, they feel that the real estate market could fall so substantially that they're even making a brash recommendation of selling your home, and then you'll be able to buy it back at a fraction of a price, 3, 4, 5 years later. So, the fact is that with low oil prices and oil prices going lower, oil's down another $1 today. So the oil market has been falling substantially. It's been extremely, extremely volatile, but the trend for oil is down. The fact is it was recently at $39. And at that point, it should have fallen further because there's such a glut of oil on the market. But the fact is, at $39, the traders felt that the price was cheap, and they bought it back, and they ran it all the way up to $48, $49. Now it's back down to 43 and change, down $1 on the day. The U.S. dollar is trading right at around 96 cents right now. The way I look at the U.S. dollar is that the U.S. is the only country in the world that can raise interest rates at this point. Meaning that we're going to see interest rate rises in in the United States, that is just going to continue to strengthen and strengthen and strengthen the U.S. dollar. And all other currencies will fall towards the U.S. dollar. So I've been saying for many years, going on 4 years now, to get some of your money outside of the Canadian dollar, converted. Take that loss at this point, because the returns are going to be gigantic. If I'm right, and this article also confirms what I'm thinking, is that if the U.S. dollar ends up going to 108 to 110, which I believe it's going to do, because, again, the U.S. is going to raise interest rates, and the Canadian dollar is going to fall further, that only puts us as Canadians into a much rougher situation. It means you're not going to be able to travel, because the difference between the U.S. and the Canadian currency is going to be 50%. And obviously that's very detrimental to doing anything outside of Canada. But you don't have to just sit there and watch this happen. There are things that you can do to make certain that you profit by it. And we've been very successful, especially over the last 4 years, of getting our clients out of Canadian dollar-based investments, getting them into U.S. dollar-based investments. The investments have been doing tremendously well. And on top of that, it gets magnified substantially because it's all in U.S. dollars. So give me a call. I'll explain how that works to you, but there's no reason that you have to sit there and suffer for decisions that are being made for you by the government. And the worst one, and we talked about it last week, was the passing of Bill C-15. Now, last week I had offered to send a report to anybody that was interested, and we had over 300 phone calls from clients that were concerned, obviously, about what's happening in Canada, what's going to happen with negative interest rates, which could be here next year, and then on top of that, what is happening with the C-15 bill. And basically what it means, and it's a frightening situation, it means this, that in 2008, and that was one of the most crucial and volatile times in the entire marketplace in the United States, that was to do with the mortgage debacle, and basically we saw such volatility in the marketplace, and the stock markets plummeted, the currency markets went crazy, and the fact is that the government had to print trillions of dollars in order to bail out banks and other corporations. They bailed out General Motors, General Electric, the biggest insurance companies, and all the biggest banks in the United States. And what that is called is a bailout. That's when the government takes money and bails out the banks. and that's the transaction. It doesn't affect the actual consumer in any way. What a bail-in is what happened a couple of years ago in Cyprus. And we talked about that substantially because we were appalled that people would actually sit back and let this happen. And we sat back and watched what happened in Cyprus when a bail-in happened. And what a bail-in is, it means that instead of the government bailing out the bank, it means that the depositor's money that is in the bank account is actually a creditor to the bank. And the bank can take that money. And that's what they did in Cyprus, and that's what could possibly happen in Canada. So this Bill C-15 allows for bail-ins in the banking system in Canada. Now, some say that the banking system in Canada is fine, but others say that it isn't. And the fact is that if the real estate market falls as substantially as it can, and oil prices continue to fall and the Canadian dollar falls, then you're going to have a totally different situation. And the fact is that if you keep more than $100,000 in a Canadian bank, anything over $100,000, because $100,000 is insured, but anything over that can be taken by the bank, and used to pay off their debts. And what you'll get in return is, in my opinion, worthless shares in that bank that is almost defunct anyways. So this is what Bill C-15 is. It gives the banks the right to steal your money. If you've got $500,000 sitting in the bank, Toronto Dominion, Bank of Nova Scotia, any of the Canadian banks, you've got $500,000 sitting there. you're only insured for 100,000 of it. If that bank decides to do a bail-in, you're going to lose $400,000. They're going to take your $400,000 and put it in their pocket. They're going to do whatever they need to do, pay their bills, try to get the bank back and running again. And what you're going to get in return are worthless pieces of paper that say you're a shareholder in this bank. Well, who the hell wants to be a shareholder in a bank that's going under? That's why they stole your money in the first place. I'm absolutely shocked that bill actually passed in Canada. But the fact is that this is the trend, and we saw it happen 3 years ago in Cyprus. And I know Randy and I sat there saying, I cannot believe that people are actually sitting back and letting the banks steal their money. And that's exactly what they did. There was no rioting. There was no anything on the streets. They accepted it and sort of went on their way. But the fact is that now that we know about this, there's no way in the world that we should be keeping more than the insured amount in any bank. So in Canada. So if you want more information, if you want to talk to me personally and find out how you can protect yourself and what this actually means to you, by all means, give me a call. It's a long weekend, but again, we work all the time. If you're interested in our programs that pay 25% a year and more in U.S. dollars, then give us a call. We'll explain exactly what's happening there. But in the meantime, gold has fallen all the way down to this morning, hit 1302. We said the gold was going to continue to fall based on the strength of the U.S. dollar. And gold actually hit 1302 this morning. There was a little bit of buying, which we call bargain hunting type of thing. It's trading right now at about 1312. But the way that I see the currency markets going and everything, over the short term, I see gold dropping to about $1,050, $1,100 in that area. I'm still very, very bullish, intermediate and longer term on gold, but with a very large short position in the markets in gold and silver. There's just no doubt in my mind that gold and silver have got to go lower short term, and then we're going to buy that market back. So again, Randy, the markets are extremely volatile. The things that we really need to point out at this particular point, there's going to be a big change in the currency markets, and that's going to affect our Canadian clients. I want to make certain that you're on the right side of this trade. There's a fortune of money to be made in it, and I want to make sure that our Canadian clients get some good market advice and can make some money on these tremendous situations that are coming up. So again, Randy, I'll send out the articles on the C-15. I'll speak to any client that is unclear as to what that means to them and how they can protect themselves. And then the article that you wrote, that we read this morning, on how the Canadian dollar could go to 160 to 170, that I believe is going to happen. And then on top of that, what's going to happen with the Canadian market. We just need to get you into the right position. So number one, you're not hurt by the decisions that are being made for you. And number two, how you can profit by them.
It's very confusing, not only financially, but geopolitically in the world. You see what's happening in the United States with the election. Lots of potential landmines there, depending on who gets elected. And then, obviously, in the environment that we're in today, you have negative interest rates around the world, bail-in scenarios, cashless society scenarios. It's very confusing. What do you do? If you're going to sit in a GIC and earn less than 1%, you're not going to make the retirement that you'd hoped. And that's why you need to speak with Harold Siegel about the different programs that he has in place that are very successful for those investors that are taking part. Find out more. Connect with Harold, 1-800-432-1022, 1-800-432-1022. The website is rarecoloreddiamonds.com, rarecoloreddiamonds.com, to find out more about the investment programs Harold has in place to help you start making money immediately. Our featured diamond of the week, and you can see it at rarecoloreddiamonds.com, featured diamond is a 1.02 carat oval cut, fancy, intense, yellow internally flawless. We will talk about diamonds coming up in the second half of the show. It's the Labor Day long weekend. We're on 630 CHED in Edmonton. Now, we should remind you, we run Sundays at 3. Coming up on September the 18th, our radio show will be on at noon. That's a Sunday. The Eskimos are playing the Saskatchewan Roughriders, so we will be on at noon September the 18th. Keep that in mind. Connect with Harold, 1-800-432-1022. The website is rarecoloreddiamonds.com. rarecoloreddiamonds.com. One of the guys that we like to pay attention to is Bill Gross. He is a bond fund king in the United States. He recently said that people should be in hard assets. Now, he said recently the Fed has mastered market manipulation. The Federal Reserve, with its bargain basement interest rates and money printer always on standby, is manipulating financial markets and crushing capitalism. He said that in his latest missive, and that was against, obviously, the U.S. Central Bank. In a letter to clients, Gross addresses Federal Chair Janet Yellen directly, saying the policies she has pushed have deferred long-term pain for the benefit of short-term gain. The criticism comes as the Fed is weighing whether to raise interest rates after years of keeping them anchored in efforts to stimulate the economy and create inflation. Instead, Gross said the Fed has merely inflated asset prices while actually harming the economy. Yellen and other global central bankers all have mastered the art of market manipulation. And no, that's not an unkind accusation. It's one in the fact that Mrs. Yellen and other central bankers would plead guilty to over a cocktail at Jackson Hole or any other together at a PhD economist event or anything. And Gross goes on to say they have lost their way. Directing his comments to Yellen specifically, he says capitalism almost commonsensically cannot function well at the zero bound or with a minus sign as a yield. 11 trillion of negative yield bonds are not assets, they're liabilities. Factor that, Ms. Yellen, into your asset price objective. Some 11.4 trillion of global sovereign debt, primarily in Europe and Japan, carry negative yields. According to recent estimates from Fitch Rating Service, U.S. yields remain well below historical norms, and the Fed has been enacting the second rate increase in more than 10 years. At the end of 2015, they raised rates. They had promised they would raise rates 4 times this year. The jobs report comes out on Friday of this week. We're taping on Thursday. The expectation is that it will not be a very good report. Now, will that mean that they hold off and do not raise rates? We will have to wait and see, but it seems that Janet Yellen, who spoke last Friday, and we talked about this on the show at Jackson Hole, said that the rate hike case has been strengthened in recent months. And there are other Fed governors that have come out and said that they believe that interest rates should be raised at least once, maybe possibly twice, before the end of the year. And even then, Harold, you know, right now in the United States, they have interest rates similar to Canada at 0.5%. Even if you raise them by a quarter point twice, you're looking at the United States only being at 1%. And those are still emergency levels. They are still very, very low rates. In fact, it's interesting to note the Fed's Evans, Chicago Federal Reserve Bank President Charles Evans, said he is increasingly convinced the U.S. economic growth has slowed permanently, a situation that will keep U.S. interest rates low for a long time to come. So it's an interesting scenario the United States finds itself in. Around the world, you have negative interest rates, as is the case in Japan, people going out, buying safes, putting money in the safe at home. They're not getting paid any interest. They're actually having to pay to have money in the bank. It's a crazy, crazy time financially. But Harold, you've said for quite some time, there are programs in place that you have where people can start making money today. And it's important that if someone wants to have a secure retirement, they're not going to do it on 1%. If you use the rule of 72, divide 72 into your interest rate, it will take you 72 years for your money to double. And let's face it, that just is not good enough. But people need to speak to you, rarecoloreddiamonds.com or 1-800-432-1022 about the programs that you have. And we have 3 minutes left here.
You bet, Randy. Again, these are extremely confusing times. Interest rates are very, very low and will continue to be low for most countries around the world. As far as the United States, even the act of raising interest rates 0.25% will have an effect on the marketplace. So if the United States is the only country in the world that is raising interest rates, and that is a fact, and it will continue to happen that way, all it's going to do is rally the U.S. dollar. And that's what we want to see happen. If the U.S. dollar is going to run, we want to be part of it. We want to make a lot of money with it. And the fact is that there's such a huge discrepancy between the Canadian and American dollars that we could make a fortune of money on it. It's just a matter of how you do it. We're very conservative. We're not talking about leveraging anything or going into risky markets. We're talking about partnering up with me on certain projects that I'm working on that are beneficial for all of us. So again, and they're all in U.S. dollars, which is imperative at this particular time that you get some dollars out of Canadian and get it working for you in American dollars. Initially, at this particular point with the Canadian at 131, it'll cost you, $1,300 to buy $1,000 worth of American. But soon that's going to be $1,600 to $1,700 for the same deal. So we could make a fortune of money. We just need to get together and explain it to you as to how it can benefit you and your family.
Speak with Harold personally, privately. The call is free, and obviously what's discussed is confidential. The telephone number to connect with Harold, 1-800-432-1022, 1-800-432-1022. The website is rarecoloreddiamonds.com, rarecoloreddiamonds.com. And it's interesting to note, and obviously this is not a concern today, probably somewhere down the line, but Jim Rogers came out and said that the U.S. dollar might turn into a bubble at some point. The U.S. dollar could hit bubble levels as investors seek a safe haven, and the dollar is going to get overpriced at some point, according to Jim Rogers. He said, and the dollar might even turn into a bubble depending on how bad the turmoil is. People are seeking safe havens for their assets and plowing into dollars, raising the currency's value. The U.S. dollar is strong and will continue to be strong because everyone's panicked about the world. And when there's panic, people look for a safe haven. Now, they think the U.S. dollar is a safe haven. It's not. It's certainly not. But he adds right now that's the best place to be. And obviously he has said in the past that's where he has some of his money. He has some of his money stashed in U.S. currency. If you'd like to find out more about shifting some of your Canadian dollars into U.S.-based investments, speak personally and privately with Harold Siegel, 1-800-432-1022, 1-800-432-1022. The website is rarecoloreddiamonds.com. Our featured diamond of the week is a 1.02 carat oval cut fancy intense yellow internally flawless. See it at rarecoloreddiamonds.com, featured diamond of the week. And we'll come back and talk more about investing in diamonds. The World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on September the 1st, 2016. It's a Thursday. The jobs report comes out in the United States tomorrow. I should remind you that a radio show runs Sundays at 3 on 630 CHED. September the 18th, we are going to be on at noon that Sunday as the Eskimos play the Saskatchewan Roughriders. It's the Labor Day long weekend. Hope you're enjoying your long weekend. And the kids, a lot of them have gone back to school already. A bit of a little break for them as they head back permanently after the long weekend. Good luck to our Edmonton Eskimos as they play the Calgary Stampeders on Monday in the Labor Day Classic. Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com. The telephone number 1-800-432-1022. Connect with Harold about our featured diamond of the week, a 1.02 carat oval cut, fancy intense, yellow internally flawless. This is a big beauty. You can see it online, rarecoloreddiamonds.com, featured diamond of the week. And one of the stories that we've talked about is the Shirley Temple diamond. And I went back and I wanted to revisit that because it's something that we brought up on past shows. On April the 19th, and in this year, Shirley Temple's rare blue diamond ring failed to sell at auction. It was a 9.54 carat rare blue diamond ring that belonged to Shirley, one of Hollywood's most famous child actors. It failed to sell at the New York auction on the April the 19th, where it had been estimated to fetch between 25 to 35 million. The Sotheby's auction for the fancy deep blue diamond ring, purchased by her father. Now get this, $7,210 was spent in 1940, around the time of the actress's 12th birthday. The opening bidding on the diamond was $19 million, and it closed at $22. And that was below the ring's reserve price, which would have been $25 million. Now, the Shirley Temple Blue Diamond is an exceptional stone in quality, rarity, and provenance, and obviously it was much coveted. In fact, after the sale, Harold did pass on to us that it was sold privately. So one would think that if it was, the last bid was $22 million, the reserve was $25, it went for $25 million plus privately. And Harold, when you think about it, 1940. $7,210, a fancy deep blue diamond ring, and here you have it selling a number of years later, a family heirloom, and it turns into $25 million. What an amazing story.
You better believe it, Randy. Again, now, obviously from 1940, that's 76 years. But in 76 years, that investment turned into $25 million. So obviously, it stayed within the family. And that's the beautiful thing about investing in these type of assets. Most people that invest in diamonds invest for 20, 30, 40, 50 years. They hand them down from generation to generation. That's where the true wealth of these assets come into play. Now, a lot of our clients buy diamonds for retirement, because look what's happening retirement-wise. Interest rates are at 0.5%, so there's no way in the world that you can retire unless you put away a fortune of money. If you've stopped working, you're going to find that you've worked your entire life and worked extremely hard. Your retirement savings plans have not done well. In the last decade, nobody's made any money. With the market the way it is, at 0.5% in interest rates and very volatile markets around the world, all you're doing is putting away money and avoiding paying taxes on it. The idea behind a retirement savings plan is to invest that money, not pay the taxes up front, build that up over 10, 20, 30 years, and when you're ready to retire, then you pay your taxes. You made a lot of money, government gets their share, and everybody's happy. That never happened because nobody's making money in that market at all. So the money that you're putting into your retirement savings plan is not doing what it's supposed to do. Now, there used to be a time when interest rates were at 10%. If you had $500,000 in the bank, you'd make $50,000 in interest a year. And a lot of people could, live their retirement life based on that type of money. But the fact is, none of those situations exist right now. Interest rates are pretty well zero, so you'll get no money back for your money in the bank. Now you've got that C-15 bill, which means you're not going to keep more than the insured amount of value in the bank. And then on top of that, the retirement savings plans that are in the stock market and mutual funds are doing terrible. So at least in diamonds, they never, ever decline in value. Rare colored diamonds do not decline in value. They'll go up over time. They're a longer-term commitment. But the fact is that, for example, the feature diamond, that diamond will increase by about 10 to 15% a year. Now, 10 to 15% a year over 30 years, you're going to double and triple your money on that investment a lot faster than you ever would by keeping your money in the bank or buying stocks and mutual funds and retirement savings plans. So even a diamond that you could buy, right now in the $20,000 to $30,000 range, an internally flawless yellow diamond that's extremely rare, you put that diamond away for 10, 20, 30, 40 years, depending on how old you are, and when you're ready to retire, you've got money, obviously much more substantial returns than you're going to get in any of the other investments. The other thing is that if you retire and you don't need the money, then don't sell the diamond. Keep it in the family. Give it to the kids and grandkids. Let them get the wealth from it. My grandchildren all have diamonds put away for their future, but they do not have any stocks or bonds or mutual funds or anything like that, because that's not something that I believe in. Those are paper assets that just, are manipulated and can go up and go down and wipe you out. That will never, ever happen with a rare colored diamond. So even a diamond like the featured diamond, which is a magnificent diamond, the color on it is intense. It's an oval, which is a very rare shape. It looks much larger than just over a carat, and on top of that, it's internally flawless. So a diamond like that will go up by 10 or 15% a year. And that diamond, if you hold on to it for, 20 or 30 years, you're going to make a lot of money from that. And as I mentioned before, if you don't need the money when you retire, you just pass it on to your family and let them enjoy the benefits of it. So right now, it's going to be nearly impossible for somebody to retire based on the current economic situation. With interest rates so low, as Randy mentioned, it's going to take you 70 some odd years to double your money. We have programs that are based in U.S. dollars that our clients will double their money every 4 years. So 72 years to 4 years is a big, big difference. We can certainly all wait 4 years in which to do well. But with my investments, they're all in American dollars, and in a lot of cases, you get paid monthly on them. So a lot of our clients that needed a monthly income are invested in our natural diamond program and doing tremendously well. Add to the fact that the American dollar keeps getting stronger and stronger, and the outlook for it is for it to really get strong. With the Canadian falling, you could make another 50 or 60% return just on the currency alone, let alone what the investment is returning. So not all of our investments are in physical diamonds, even though most of our clients do own, physical diamonds for their long-term future. These other programs are partnerships with myself, and they're going extremely well. So right now, the markets are insanely volatile. The oil market is all over the place. The currency markets, Brexit wreaked havoc on the financial and currency markets. We need to be together on this. The fact is that there's so much risk in the marketplace that most people invest in stocks or commodities will lose their money. 90% of the people that trade in those markets lose. So why in the world would we ever want to put money into those markets where the odds are so far against us making money that it makes no sense? The reason that people do that is that there's a comfort level there. Their money managers give them a sense of security, saying that if the market does fall, it always comes back. Well, we know that's not true, because the fact is that most people will never be able to see the market come back. For example, in 1999, when the NASDAQ fell from 5,000 to 1,000 and everybody got wiped out in those dot-com companies, .com, not .com, but .com companies, when everybody got wiped out in those, the fact is that the NASDAQ dropped from 5,000 all the way down to 1,000. Do you realize it's now 2016? 17 years later, and the market is just getting back to 5,000. And the fact is that if you had held on to your particular stocks, you never, ever would have made that money back, because a lot of those companies are defunct now. So, again, for the everyday hard-working Canadian, those are not the right markets for you. To stay in the stock market, you're going to lose your money. To stay in the retirement savings plans market, you're going to lose your money. You're not going to make anything. It's proven. In the last 10 years, in the last decade, hardly anybody has made anything in those markets. So you've got to change the way that you do things. If you continue to do the same thing over and over and over and expect different results, it's just not going to happen. Right now, with the world the way it is, we need to be diversified into different areas. Hard assets like gold, silver, and diamonds are extremely important, because we don't know what's going to happen, tomorrow. What if Donald Trump gets elected into office? Do you realize the pandemonium that will be in the markets at that particular time? Along with that, what's going to happen with interest rates going negative in Canada by next year? That means that we're going to, listen to this, this is how crazy this is. We're going to actually pay the bank to keep our money for us, pay us no interest whatsoever. We're going to pay them to keep our money. Now, we know that the banks are not safe, because the C-15 bill explains that they can do bail-ins now. That means that on one hand, we put our money in the bank and we pay the bank, they're not paying us anymore, no interest. And number two, if that bank closes down, they're going to take the majority of our money. Who in the world, Randy, is going to do something like that? I just can't believe
Crazy.
that this is actually happening at this particular time of our life, and the government is trying to pass this off as the best thing for the general public. The best thing for the Canadians right now is to be in a bail-in situation and to be in the financial situations that they've gotten us into. How ridiculous is that, Randy? So the fact is that you've got to think outside the box. Something that I've always been able to do, pick trends in markets, and we pick some of the most amazing trends that we've seen. And we've got trends coming up, and we've got investments coming up that our Canadian clients will continue to do tremendously well with. Not getting into a market where 90% of the people lose in stocks or 90% lose trading commodities. We want our clients and listeners to our radio show to do well, not to be in those type of volatile and risky investments. Don't Rare colored diamonds physically for your retirement is a very, very smart move. To get out of Canadian dollars, take the hit now and put that money into American-based investments with us that are returning, tremendous returns, makes more sense than anything you could do at this point. If you don't understand the C-15 bill, call me, let me explain it to you. I'll send that article to you. If you want to see the article in the newsletter about the Canadian dollar going to 160 to 170, you need to get the newsletter. It's totally free. And by the way, everything that Randy and I do for our Canadian listeners, we don't charge for. There's no charge for a radio show. There's no charge for our famous newsletter, any of our seminars. We'll be doing seminars over the next year on the cashless society, on negative interest rates, and on the C-15 bill and all that type of thing. So we can do virtual seminars all over the world, and you can attend them on your iPhone, your computer, or your iPad. That's what we've been working on for the last year as far as our technology goes. We're going to be doing tremendous auctions this year and next year. We just got some unbelievable gold nuggets. We've got so many amazing assets right now that will help our clients get to where they need to go that I've really never been more excited, because in all this turmoil and all this craziness that's going on, there is a light at the end of the tunnel, and I believe that we're shining that light.
Without a doubt, connect with Harold, 1-800-432-1022. 1-800-432-1022. The website is rarecoloreddiamonds.com. As we say on our show, it's not about optimism or pessimism. It's about realism and realistically putting you in a position where you can make money today on your investments. As we've said on past shows, if you're sitting in a GIC in less than 1%, making less than 1%, you factor in inflation, taxes, you're in a negative position. You will not retire in that situation. That's why we urge you to connect with Harold to find out more about bail-ins, negative interest rates, cashless society, where the Canadian dollar is going to be going, and his recommendations on getting into U.S. assets and obviously having a program in place that's going to make you money. Our featured diamond of the week is a 1.02 carat oval cut fancy intense yellow internally flawless. See it online, rarecoloreddiamonds.com, rarecoloreddiamonds.com, featured diamond of the week. We touched on the Shirley Temple blue diamond, as we've mentioned it on past shows. Bonhams actually reported this week, they're out of London, that the fancy intense blue oval cut blue diamond ring that they have coming up for auction weighs 3.81 carats and is accompanied by a GIA report. It's expected to sell for around 1.5 to 2 million. And Jean Gika, who's the head of the jewelry department for Bonhams UK and Europe, says blue diamonds are extraordinarily rare and account for only 0.004% of all diamonds mined. This particular diamond is categorized as a fancy intense blue with no modifying or secondary color. With so few blue diamonds coming to auction, we are anticipating global interest. And Bonhams has a strong track record for selling blue diamonds at auction, and they hold a per carat world record for a fancy deep blue diamond at 1.77 million per carat. The reason we mention that, we are getting into auction season in September, October, November, with obviously Christie's, Sotheby's, Bonhams, and we will keep you up to date. If you would like to find out how the auctions went for the first 6 months of the year. We have auction results for you. We can send them out to you via email free of charge. And we can do that. Connect with Harold, rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022. But Harold, for those that might have missed it at the very beginning of the program, we have a couple of articles we definitely want to send the way of our radio listeners. And one of them has to do with the Canadian dollar. There was a great article, and it came out on Business Insider. And it was about the Canadian marketplace. And they were talking about what was going to happen in the Canadian marketplace, not only just with the Canadian dollar, but the housing market as well. And for those that might have missed it, we'll repeat it now. We can send the full article to you. Jared Dillian says the Canadian dollar will continue to drop. The Canadian dollar is facing major headwinds. Dillian, the former Lehman Brothers trader and noted financial writer, notes it's likely the U.S. Fed will raise interest rates while the Canadian Bank of Canada will cut rates if they move at all. This dynamic will put more pressure on the already weak Canadian dollar. High and rapidly growing consumer debt in Canada is a concern. The housing market is a concern. Obviously, the employment market is a concern. Dillian thinks the Canadian dollar could move to 160 to 170 to the U.S. dollar. It's currently trading at about 130. He believes that shorting the Canadian dollar is one of the best macro opportunities over the next couple of years. And as we've said, we're Canadians. I'm a Canadian. Harold's a Canadian. We have nothing personal against our great country that we love, but this is an opportunity, obviously, where people have a potential opportunity to make money. And if you would like to find out more, speak with Harold. Get money into U.S. assets, into U.S. money-making opportunities. Speak with Harold, 1-800-432-1022. The website is rarecoloreddiamonds.com, rarecoloreddiamonds.com. And Harold brought it to our attention last week. And we had talked about it in the past when it was first brought down. A lot of Canadians may not be aware of it, and that is the Canadian government's bail-in now is law. It went into effect a couple of months ago. It's a bail-in regime. In the crash of 2008, what happened was governments bailed out banks with billions and billions of dollars. The next time, it's going to be us. That's right, we will be bailing them out. They will be permitted to seize deposits and exchange them for shares. And as Harold mentioned earlier, that's what we saw in Cyprus. Shares in a failed or a bank that is in serious trouble. Some say the Canadian banks are very, very strong, but experts say in Canada there's some serious problems. DBRS, Moody's, and Standard & Poor's all have downgraded Canadian banks to a negative outlook. The Bank of Canada says our housing market is 30% overvalued, Deutsche Bank 63%, and CMHC saying 35%. With average house prices now over $1.3 million in Toronto and Vancouver, a crash or at least a severe slowdown appears imminent. Canadian banks have over $1 trillion invested in residential mortgages. Obviously, if they come down very, very severely, the Canadian banks could be in trouble. Deposits under $100,000 appear to be covered by the CDIC insurance, but anything above personal or business will be fair game for the bail-in. The crash of 2008, the bailout banks obviously happened when they bailed them out for billions of dollars. The next time around, banks will be permitted to seize deposits and exchange them for shares in obviously a bank that's in trouble or failed. And one thing to keep in mind too, Harold, and this is something we do know, we're not trying to scare people, but we're being honest again, and that is the CDIC, or even in the United States, the FDIC, if it came to a point where everyone needed the $100,000 that they're covered for by the bank deposit insurance, they don't have it. They don't have it. The money is not there. They have a fraction of the money that would be needed to cover off all the deposits that are currently insured. So that is another concern that people have to take into account, Harold.
You better believe it, Randy. Again, it's an unbelievable time, and people just need to understand, what they can do to protect themselves. Because again, we're just small investors in a situation where, in most cases, decisions are being made for us by the government. Obviously, we don't have to go that route. You can either be like a lamb going to slaughter and just say, well, everybody's doing it, and if it's good for one, it's not like that. We can make decisions outside of the box, because most conventional investments do not do well in this type of environment. With no interest rates, that takes away anybody's opportunity to retire, because they just won't have any income from it. There's no interest to be paid. There was times when interest rates were at 10%. Back in the early 80s, interest rates got to over 20%. Those days are long gone. The only country that can raise interest rates at this point successfully is the United States, and they are going to do that continuously, and the U.S. dollar will be the strongest currency. If we know that's going to happen and we don't do anything about it, then shame on us. But the fact is, we have an opportunity to make a lot of money from this, and if that's of interest to you, give me a call. Let me explain to you how we will do that. And we're not leveraging, and we're not taking unnecessary risks. We're just being smart about it and taking advantage of an opportunity that I know how to deal with that most people don't.
Speak with Harold personally, privately. The call is free. And obviously, anything discussed, confidential, 1-800-432-1022. The website is rarecoloreddiamonds.com. rarecoloreddiamonds.com. And when you go to rarecoloreddiamonds.com, take a look around. What you're going to see is the world's most impressive feature of diamonds, museum-quality diamonds that are investment quality. And our featured diamond of the week, a 1.02 carat oval cut, fancy intense, yellow internally flawless. See it, featured diamond of the week from rarecoloreddiamonds.com, rarecoloreddiamonds.com. Get our free weekly newsletter. It's imperative. It's the companion to our radio show. All the material that we're talking about, you can be reading as well. We'll be happy to send it out to you, 1-800-432-1022, rarecoloreddiamonds.com. And one story I wanted to get to quickly before we have a final comment from Harold at the end of the show. Deutsche Bank CEO says negative rates have fatal consequences. The head of Germany's embattled Deutsche Bank believes negative interest rates are posing an imminent danger to the economy, savers, and pension funds. John Cryan warned of fatal consequences that could occur should the European bank continue down the road of negative interest rates. The ECB is holding its deposit rate at negative 4.4%. Government debt yields pretty much throughout the Eurozone are negative as well. In fact, you're looking at negative yields, as we mentioned earlier in the show, of $11.4 trillion on global sovereign debt. Absolutely stunning. And Harold, with about 30 seconds left, we'll give you a chance to wrap up today's show.
You bet. Again, the markets are very confusing and very dangerous. We work way too hard to throw away our money. The banks are in big trouble, and again, with the bail-ins coming to Canada, we need to make sure that you understand what you can do in order to avoid that. So please, get in touch, get the newsletter. If there's any way that we can help you understand the C-15 bill or what's going to happen with the currency markets and how to take advantage, it's our pleasure to do so. We love our clients and listeners. All we want is for you to do well. I wish everybody a wonderful long weekend and a very profitable day.
Thank you very much, Harold Siegel, for your knowledge once again. Connect with Harold, 1-800-432-1022. The website is rarecoloreddiamonds.com. We hope you have an outstanding Labor Day long weekend, and good luck to our Edmonton Eskimos tomorrow in the Labor Day Classic down in Calgary. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.